Hello and welcome to another edition of Commodities Corner. In anticipation of Chinese imports and central bank meetings this week, I'm discussing the impact on base metals, in particular iron ore. I'm joined down the line today by Eugen Weinberg, Head of Commodity Research at Commerzbank. Eugen, thank you for joining me. Firstly, looking at base metals in general, if you wanted to invest in this market, where should you be looking right now?
The base metals markets in general were quite weak as of recently, and I think that I wouldn't be really too much differentiating between the medium to short-term prospects among the different base metals. But definitely for longer term, we're definitely looking more at copper as being a very much infrastructure-driven metal, but also the likes of zinc and nickel being also supported by the increase in demand worldwide, especially from the emerging countries, and by the constraints on the supply side.
Are investors being cautious on base metals this week ahead of US non-farm payrolls out tomorrow?
No, I wouldn't agree to this because as of recently, the US data surprised to the upside, and I'm not really sure that the industrial metals were much under pressure on the fundamental side. It's more the psychological thing, and the continuing outflows of the investment money from the market, which has been keeping the prices going lower. In fact, the positioning of the traders, the positioning of the money managers on the U.S. exchanges, for instance, on copper, has become negative for the first time since the late 2012. And I think this is one of the reasons, rather than the fundamental data. So the change of the sentiment towards base metals has been keeping the prices down, and I think we are likely to experience yet another change, this time to the positive during the course of the year, with improvement of the economy being reflected also in higher prices.
With China making moves to cool its property sector, how much of an impact will this have on the outlook for base metals?
China is by far the largest consumer of all base metals and one of the largest importers of them as well. Definitely, anything which is going on in China is having its effects also on the markets. And what is surprising me is that the incumbent government, just several weeks before its leave, because the new government with a new prime minister and a new president are now to be confirmed by the People's Congress, which is to start in Beijing this week or next week. It is surprising that the government decided to go after the property sector, given the fact especially that the property sector was already under much pressure from the government during the course of the last years. So I wouldn't be surprised if the new government would revise its measures and would not put too much pressure on the property sector, because it's so important for the Chinese economy, but also for the Chinese domestic consumption. And I think that the property sector in China is by far not overheated. So there is no real need for such matter at the moment, and that's why I think that the impact on the longer term will be minimal, although probably on the psychological side, such measures might have led already to somewhat lower prices.
I see. And do you think that market participants are more focused on ECB and BOE policy decisions out today? How will these decisions impact the market's view on base metals? The
central banks have been playing a central role for the base metals, but also for the precious metals, as well as other commodities during the course of the last year, by providing extreme liquidity influx to the market. And the interest rates in Europe, as well as in England, as well as in US and many other countries at the moment, especially the real interest rates, are not only low, but they're negative. And in such situation, there is an increasing need for for inflation protection, for capital protection. That's why it already had an effect on the commodity sector in general, with commodities being seen as tangible goods and also profiting in the times of high inflation. So definitely there is a focus of market participants on such decisions, and there is a room for some move for both, especially with the new governor of Bank of England coming soon, and also the ECB saying that there is a potential for further rate cuts even from the current levels existing. We don't think that there will be much done today, but definitely there is a potential, and the liquidity situation worldwide is continuing to stay extremely relaxed, and this will be supporting in the longer term the commodity prices and also the base metals prices strongly.
Lastly, Australia's trade deficit widened by more than double the expected number due to tropical storms. How much did these interruptions affect iron ore production?
Well, definitely it has a major effect on the Australian economy, with Australia being one of the largest exporters of this together with Brazil. The prices of iron ore, they have recovered a lot since last summer, as the prices were trading below $90. They increased to over $150 recently. We think that here the prices increased somewhat ahead of the fundamentals, and see the prices of iron ore sliding through the year by some 10%, but it will not have a major negative impact on the iron ore exports, but as well on the export revenues, as I said, because compared to the 1 year ago, the situation has improved a lot. So I don't think that it will be any negative impact from this side. Just to the opposite, the iron ore demand in China is likely to increase this year again, and also the imports of iron ore by China are likely to increase this year as well.
That was Eugen Weinberg from Commerzbank on his outlook for base metals. Join us for another Commodities Corner on Tuesday. Take care.